Yo, 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 this is Trading Trenches, your number one podcast for trading news and views, helping you navigate the financial markets. Today is the 27th of January, 2021, and this is episode 9. It's your boy Nathan.
It's your boy Warren.
And today we're here to talk to you about the GameStop Bandits.
The GameStop Bandits.
Banditry.
Oh, what a couple of days for GameStop as a company. Right, for those who don't know about GameStop, they are a games company similar to your game stations, your game on your retail stores, or when you go out to the high street, when you see these CEXs stores. So current prices now is at $146. Their market cap is 10.36 billion, and their revenue last year was 6.7 billion. Now, the last couple of days have been a very exciting time for GameStop in terms of market price. Now, just yesterday, it closed at 90% return of investment. So if you put 1,000 in, you would have got 1,900 back. The day before, it recorded 100 plus investment percent, 100+%. So those 2 days, they've gone up exponentially, and we just need to congratulate GameStop for going up, because some people have made a lot of money from this turn of activity, and we're going to explore how it actually happened. So, Nathan, do you have anything to add?
Yeah, I mean, I'll just add that at the start of the month, GameStop was trading at $17. So yeah, as you said, $17 to the 140s. So almost 8-9x.
Wow.
So a crazy return. So I guess to understand what's happened with GameStop, you also need to understand Wall Street Bets. Now, Wall Street Bets is a Reddit. And they've also got Twitter profile as well. Now on Reddit, they've got 2.5 million followers, and these are young people that are kind of investing for the first few investments. They don't look at sort of the traditional metrics, so they don't care about earnings, they don't care about PE ratios, they don't care about the typical accounting metrics that investors usually look at, and they've taken positions on GameStop purely because they noticed there was a lot of short positions on the stock, and actually there was up to 140% in shorts.
Okay, 147%.
Yeah.
Okay, so sorry to stop you, but I'm gonna just ask you, what is a short?
Yeah, no, sure. So, of course, you can buy a share when you think that the prices are going to go up. And I guess the opposite is taking a short position. So I guess the mechanics of that is that you would borrow a share. So let's say you'd borrow GameStop's shares, and then you would buy it, hopefully at a lower price. So let's say it was trading at, I don't know, $10, just to give the example. You borrow it at $10, the price goes down to $5, you then buy it back at $5. And then because you borrowed it at a higher price and you're giving it back so you borrow it, sell it, you buy it back at $5. So I would give it back to you if I borrowed it from you at that lower price. Obviously I can make that $5 difference. Now, the total amount of shares that were sold short was 140%. So that means people had not only sold all the shares that existed, but they had sold them and then resold them. And so it's almost the biggest short, almost in the history of stocks, in all honesty. Now, the Reddit Wall Street Bets noticed this massive position. because companies and hedge funds were making money for months and months on end from GameStop, from this short position. So all they were thinking is, look, the price keeps going down, we're going to keep shorting it, and we're going to keep making money. And so what you have, because of COVID-19, none of these stores were opening. No one was coming in and trading games back and forth, trading consoles back and forth.
Yeah.
So what you had was quite an easy assumption when you think about it, to think prices will go down. But of course, the mechanics of the short is that if you sell and then buy it back, you need to buy it back at a lower price.
Yeah, that would make sense. That would make sense. Yeah, I understand that now. Yeah. So that's basically what they've done. Is that what you're saying?
Yeah, so the Wall Street Bets Reddit have taken the opposite side of the trade. So you've got GameStop, I guess in the middle, it's their shares. You've got Wall Street Bets, that we'll call the Bandits for now. They're the young, I
The
guess you call them,
bandits.
you call them the TikTok traders, or these young money or dumb money even, that are kind of putting their finger up at the hedge funds that have been shorting the stock. So as prices go down, they've been buying more and more and more. But the problem is that large institutions like Melvin Capital, which is a $12.5 billion hedge fund, has
Yeah.
been losing a lot of money as the price goes up. So
Okay.
the Wall Street, the Wall Street Bets Reddit, their aim is to break Melvin Capital. So it's kind of a tug of war, really, between this huge institution that's got
Yeah.
millions and millions of dollars, worth of shorts, versus these small bandit sort of traders that are thinking, well, if we just keep pushing the price up, eventually you're going to have to buy back these stocks.
Yeah, I
But
get it.
it's really interesting because Melvin Capital have lost already $4 billion in their short position. So you got to think, these prices have gone from $17 up to what, 130? Did we say 140 already? They've already lost 4
146.
billion. Yeah, they lost so much money that they've had to get a loan from um, Citadel and Point72 Asset Management. So they've
For
borrowed
how
them
much?
an additional 2.75 billion.
Okay.
Okay. Now, the day after they borrowed them that money, the price has doubled, which means they pretty much lost again that same amount of money that was just borrowed to them
In one day,
in pretty much in one day. Yeah,
they lost 2 billion.
2 billion. Yeah, and the issue is, a part of this short squeeze is that the higher the prices go, the more precarious the position Melvin Capital find themselves in, because
Right.
eventually they have to buy back the shares.
Yeah. So they're having to buy back the share at $146, but they can't afford that, can they?
They can't afford it, so that's why they borrowed more money, because they thought maybe we can ride out this short position. So what they're
Yeah.
hoping is that the investors that are buying it kind of lose momentum, get tired, um, take their profits, because some investors are sitting on some very big profits, you can imagine.
Yeah.
So they're hoping that they can
I can
kind of
imagine.
ride this out, but it's becoming more and more of a meme. And we're seeing even on, we're seeing even on Twitter, the likes of Elon Musk, he posted GameStonk with a link to the Wall Street Bets. We're seeing quite
Elon
a few
Musk did he?
yeah,
Did he tweet that?
yeah, Elon Musk posted GameStonk, and also included a link to the Wall Street Bets Reddit profile. So it's becoming more and more of a meme. More and more people are piling in. And what we're going to see really is that the prices are likely to keep going up, because everyone knows at some point, Melvin Capital are going to have to buy back all these shares. So as high as the price goes, people know there's another 140% that might buy. And
Yeah.
until that happens, you have to assume prices are going to go up. And some people, are just going to hold until that happens.
Okay, so this hedge fund has lost 2 billion in one day. That
Pretty
was
much,
loaned
yeah.
to them
Yeah.
through an asset management company.
Hmm.
So, what my next question would be is, where do you see this going? I mean, are we going into a crash for this hedge fund? Is this hedge fund going to lose potentially all of 12 billion worth of assets? Where do you
Well,
see this going?
this is the thing, right? So you got to remember there's always two sides to every trade, and then there's also a market maker in the middle. Yeah. So for Melvin Capital to take these short positions, they're borrowing stock from another company. Yeah.
Yeah,
Now, eventually, this company is going to think, well, hold on, your total assets are what, 12 billion? You've already lost 4 billion. You took another loan for 3 billion, which you pretty much have lost now. They're starting to think, well, am I actually going to get my shares back? So
yeah.
it's kind of like this fine balance between how high do the shares go, and also at what point does Melvin Capital run out of assets to actually back their position?
So, if you was
Now,
Melvin Capital CEO, would you be worried right now?
oh, worry is not the word. They are they are very, very nervous. I mean, the, the funny thing is, right, a hedge fund is supposed to hedge risk. That's what a hedge fund does. They've taken 140% almost worth of shorts. I don't think it's all them, but let's say a good percentage is theirs. Like at least 100% is almost
Yeah,
theirs, right? So that's not a hedge. That's anything but a hedge. They've taken on
that's
so much
very risky,
risk.
no?
I mean, they've taken on so much risk that it could blow them up. And when I say blow them up, they run out of equity and their market maker calls them up and says, you need to close this position or we'll close it for you, kind of thing.
Right.
So for them to close the position, as I said, they have to buy back all these stocks. The higher the price goes, the higher the price of them closing their position, the more likely they are to run out of money, in very simple terms.
Okay, that
So,
makes
so,
sense.
so the Wall Street bets, all they're doing, they're waiting for this fund to run out of money. And when they do run out of money, the price is going to push even higher. And that's the crazy thing about it. It's like a
Even
one-way bet.
higher,
It's going to push
even
even. It
higher.
has to. It has to because they have to buy back 140% of the shares or 100%, however much they have. They have to buy back
So,
100%.
so it went. So the last 2 days, it was one day it was 120%
Yep.
return. Yesterday was 90% return,
Yep.
and you believe that it's gonna go even higher than $146 now.
Well, that's the thing. You've got two things driving this, right? You've got, well, three things, but one of them, the first one is that retail money, and it may be even some institutional money now, is seeing what's happening. They're seeing the posts, they're seeing the tweets, and they're thinking, well, I might as well put a cheeky bet on this. So that's one thing. The second thing is that you've got the market makers that have essentially they have to buy more shares as well to hedge positions.
Yeah.
So the market makers that have either sold options or they're trading this, they have to buy more as well. And then the
Right.
third thing that's going to drive the price up is that the company themselves, the hedge fund themselves, once they close their shorts, they're going to have to buy more. So you've got three kind of drivers pushing money into the stock. And some estimates are between $1,000 to $5,000 in terms of price. So, I mean, I probably see it on the lower side of things, but I wouldn't be surprised if prices ran up as high as $1,000.
That's a 10x
Pretty
right
much,
now.
yeah. Pretty much. And this could all happen very, very quickly. It could all be very, very volatile. I mean, what we're seeing is that the exchange in the US is having to halt trading of the stock because it's so volatile. So when the
Hmm.
stock runs up 40% in 20 minutes, the exchange is having to halt trading just to kind of calm things down. But as soon as they open up again, the same thing just keeps on happening. Um, it's absolutely unbelievable. I've never seen anything like it. I doubt we'll see anything like it again. And these Wall Street bets, the GameStop bandits we're calling them, some of them are walking away with 10, 20, 30 million dollars. One guy, I saw a post, he's made about $30 million on options, and someone estimated if prices go to $2,000,
Yeah.
he'd have enough money, I think it was to buy GameStop, which is like to buy the whole company that he's basically been trading on. So
Sorry,
crazy
sorry.
stuff.
This is just this is a joke, really. This I love this. I love
But it's
this.
it's this
The reason
meme
why I love it,
culture. It's the meme
the reason
culture.
why the
Yeah.
reason why I love it is because it's such bandit behavior. It's so lawless.
Yeah.
It's just
Yeah.
in the night
Yeah.
creeping,
Yeah.
and it's dumb money v smart money, and dumb money's winning at the moment. Retail people are winning, and I'm part of the retail, so I'm for that.
Yeah.
So I love this. I love this.
And
Hope it
it's
goes
it's
up.
it's almost like Wall Street bets are trolling Melvin Capital.
Yeah.
Um, and I've seen some of the posts, and some of them are actually quite um philosophical in some ways. They're kind of saying, well, when we make trades or bets and they don't go the right way, there's no one here to bail us out. There's no one here to help us.
Hmm.
When Melvin Capital have taken this irresponsible position, why should they get bailed out? Why should they get any help?
They
Which
lost.
is quite philosophical. Huh?
Yeah, they lost 2 billion in one day, and they're
Yeah,
gonna probably get bailed out again.
could do, could do. Um, but yeah, no, really interesting stuff.
No, it's brilliant, brilliant topic. GameStop. Congratulations on your increase of share price. Really.
Yeah,
Um, I hope
I,
it continues to go on, and we'll just have to wait and see.
yeah,
Um,
and really, the real winners. I mean, GameStop. Obviously, they're going to be happy. Anyone that holds the shares is going to be very happy. But the real winners here are like the retail investors that, obviously it hasn't broken yet, but it looks as though they're going to break a hedge fund. Um, and these little Wall Street traders, these little young retail traders who they just live for the memes, they're just living for the posts. They are going to be the real winners. And a lot of them, are
this
making
is gonna
life
hit
changing
me.
money. A lot of them
This
making
should be
life
a
changing
movie.
money.
This
I
should be a
think it will be.
movie.
I think it will
Yeah,
be. The
I
Big
think it
Short
should
with
be.
Michael Burry, where he bets against the housing market in the
Yeah, I
2008
watched that.
financial crisis.
That's on Netflix,
Um,
by the way. If anyone wants to
thi-
watch that, Big
this
Short.
is going to be like I don't know, the big squeeze. We had the Big Short. This is
Squeeze.
going to be the big squeeze, or the big, or yeah, or the Melvin, yeah, the big squeeze. I think that's going to be it.
Well, you heard it here first, guys. GameStop, continue to do whatever you are doing. Because I am a happy man. I made some money off you, so continue. And we're gonna just follow the journey. Um, I think that's it for today. That's episode 9, and we've covered a lot of topics during this episode. Um, please feel free to subscribe to our channel. We're on YouTube, Spotify now, and yeah, let's just we're just going to continue our journey, really. So please follow us as we trade in the trenches.
Boom.
Right. Nathan, do you have anything to add?
Nah, that's it for me. All right, bye, guys.
Bye, guys. Take care.
This podcast is for information and education to investors and is not financial advice. Investments and trading carry risks to your capital as well as potential rewards. If you are unsure of any investment decision, you should seek a professional financial advisor.